Here I'm taking a look at importing some accounts using our Excel templates. You'll notice that I'm going to provide two demonstrations for a partnership. The reason I'm providing two demonstrations is because I will provide a demonstration where we use a single set of rows, one row per partner, and then I'll provide a demonstration where we provide multiple rows per partner because we're representing the differences where we have opening balances and share of profit. So the reason that we've got some opening balances here, let me just explain. In this year, so let's have a look up here. We've got our trading revenue per year, other revenue. We've got some direct costs. We've got some indirect costs. So we've got our net profit over here, and this net profit is split 50-50 in this case with the partners. So 50-50. Yep. Okay. And the same this year, split 50-50. And in this example, so this is the multiple partner rows, these partners don't take any drawings, so their share of profit rolls forward to the next year and becomes their opening balance for their account. So prior year's profit becomes this year's opening balance. And then if we have a look at the other example, so we have a look at the other example, single row, you don't actually see that, right? You just see the single row, and you have to extrapolate from the facts as to, why has that balance gone from 32 to 38? Well, there it's very simple. It's a share of the profit. And here it's the opening balance plus the 50% of this profit, right? So we've got two different methods, and there's a reason that I'm going to show you this. So let's dive in and do the imports. Import that single row partnership first. So single partner row. Upload that. Easy. So you got your profit and loss. You get balance sheet. Just check those balance. Manage the classifications. It's all good. Okay, so you see when you get your naming conventions right, it'll pick up and put it in the right spot. All looks right. So head over to custom reports. That's for 2020, right? The 2019 comparatives. So balance sheet balances, but what we need to do is we need to split out that profit. So we can see here it's 32,901, 32,901, 32,901. I think there might be oh, that works perfectly. So what about that other year? Easiest to look at this set, 5417. 5417, 5417. Okay, no profit left, all shared. And we have our closing balance for partner Anna and closing balance for partner John. So you can see, so you could see it's giving us this because it's working backwards. It works backwards to find the balance. So in this case, we're not getting any problem. So you're either, because of the rounding, you're either going to accept a small difference there or the fact that you've got this $1 starting. I think I'd go with the $1 starting difference. It is really just a rounding issue, but needless to say, your partnership set of accounts should look fine. And bear in mind, typically you will have other line item values. So let's have a look. That looks good. And yeah, that's just rounding there. But you can see how that's working in that case, where we have where we have single row, right? So single row, you're having to do a little bit more manual stuff. And the reason that you might want to work with a single row is because single row is less complex, and you don't have to do any closing journals to get from there to there. You just let the account balance grow. But of course, you've got to go into Logit if you want to produce special purpose reports and do it in the way that I just showed you. In this case, we'll work with multiple partner rows, and let's go through the reasoning here. We've got share of profit. You can see that split, profit split. Profit split, and balance is carried forward. So multiple partner rows. Just have a look. Balance sheet, net profit, balance sheet balancing, check our classifications. Bank looks right, net GST. Oh, okay, so you've got to be careful here because that's the share of profit, right? And that's opening balance. It's putting it to closing balance, which it's not. It's share of profit. Okay, so I fix those. And then I can go to work producing some special purpose reports. Okay, 2020. Easiest way to do it when you've got multiple rows is, we'll start with our, we've got opening balances. So partner opening balance for Anna, partner opening balance for John, and share of profit. And share of profit for John. See how that works. So 32 walking its way forward. And you can see how I've made a mistake, right? So you've got to be careful because it's easy to make a mistake. There should have been opening balance for John. See how that works its way forward. Okay, so it's essentially the methodology that you would use when you've got multiple rows for your partner, for your partners. Okay, partners equity and profit all shared out, and the partner accounts, 32, and the share of profit. So that is the methodology that you would use when you've got, wrong one, that one, multiple partner rows. And the reason that you do this is to keep your rows and the information for the different rows separate inside of whether it's QuickBooks, Xero, MyOb, whatever. And obviously this methodology gives you, it's more fine-grained. You have more, I guess you've got more control over where you're putting transactions inside your accounting software. The downside is that obviously if you're using something like QuickBooks, Xero, or MyOb, you're going to have to do closing journal entries to get the share of profit to show up as opening balance in this year. Now, when we introduce our postbacks, then we'll use this methodology. This is the fine-grained methodology, and we'll build a postback engine that will automate some of the journal adjustments.